All right, the shilling looking a little bit better. People actually expect it to improve in the coming weeks on the back of issues like Mashudu's raised demand from importer or exporters, the tourism sector, even NGOs, and it's all supported by the interest rate decision taken last Thursday.
Yes, it's true. I think the key thing is the MPC's decision to increase the policy rate, the CBR rate. This is key in determining the strength of the shilling as much as it is in lowering the inflation rate.
All right, let's talk about other issues. As we're seeing interest rates rising to 18%, how does that compare with the rates of treasury bills and government securities? Because that will be a variable that really draws in investors, a stronger shilling and good rates of return.
Yeah, going by the last auctions last week, the interest rates on treasury bills are still below the policy rates, which means also that real returns are actually negative. But going forward, we expect T-bill rates to increase and probably pass the policy rate.
What do officials say about inflation? Because it's still the one damper to sentiment at just around 19%. They had expected that things would have looked better by year's end, and they're not looking better.
To understand inflation, you have to look at the prices of food and fuel, which are the biggest constituents. Going by last month, inflation went to 19.72 on account of high fuel prices. We saw about 3 shilling increase in oil prices. Food, we expected it to decline, but there's also an issue of excessive rains that could affect food supply. But going into the end of the year, we expect the inflation rate to subside. So we're looking at, if it peaks, 20%, but it should lower going into the first quarter of 2012.
The broader impact of the currency and inflation on the economy, we're starting to see quite a lot of public sector workers go on strike, the doctors being the latest. So there is a sense that wages also have to rise above inflation, and that's not happening.
Yes, yeah, what's happening is what we would call the second rounds of inflation. The second round effects of inflation, actually. So with the high inflation rate, we expect, people expect their wages to increase. This is not happening. And the government is under pressure to increase their wages for public sector workers. But it's still an issue that is of great concern.
For business, it has meant that changing prices have added to the cost of doing business, particularly the energy and fuel component. And we've already seen businesses balking at the fact that it's just too expensive, one, to service the debts to the bank and just to keep operational costs down.
Yeah, those are two key risks for businesses. The high inflation rate in terms of operational costs, and also the cost of borrowing. And this could affect the performance of companies going into their financial reporting periods. But again, I still believe that the fundamentals are still sound and the companies should perform quite well.
All right, let's talk about the companies that are visible in today's market. Kenya Power, they've already said that they expect defaults just in terms of people being able to meet the payment requirements at about 42%. So they're not really very optimistic about the near future.
Yeah, with Kenya Power, it's a difficult business right now because they're unable to increase the tariffs because of regulation right now. But they'll be forced, or the regulator will be forced to allow them to increase their tariffs to pass on the cost to the consumers. And that should spell improved performance. Although the growth rate, we expect the growth rate to decline as opposed to the previous years.
CFC Insurance, also another one to lose a little bit of ground. I mean, their sister company recorded very good profits for the third quarter. Why doesn't that reflect on this side?
Okay, with insurance companies, interest rates are key factor to consider. With high interest rates, it's going to affect investment income and returns from the investments. Most insurance companies in Kenya make bulk of their profits from investment income rather than underwriting. And with high interest rates, this is likely to affect their financial performance.
Okay, good day for Crown Badger at 8.3. Why is that?
With Crown Badger, we have to look at the volumes also. The volumes are not significantly high. 2,700 shares traded today. So this is just market forces playing rather than actually any fundamentals driving the share price.
City Trust has also aroused a bit of interest, not just in today's session, but rather in the last 2 weeks, talking about going into countries like South Sudan, those kinds of things. What makes this company a good one?
City Trust, why I would think it's a good investment is also the investment plans, the future investment plans. They've already announced that they're buying a regional bank, and this bank is expected to be quite sound in terms of operating performance. So these are some of the reasons why the share price has been performing as it has.
And then a final question. Standard Chartered seems to be adamant to go ahead with their rights issue. We still don't have the details, but the question is, why enter the market under these conditions?
Okay, with Standard Chartered, I think it's still too soon to tell because they're talking about the rights issue next year. We expect market conditions to improve next year. Interest rates should remain stable, and then it could be a better time to talk about a rights issue. Under the current conditions, it's in doubt.